Fundamental problems: irresponsible lending, widespread breaches of the law and regulations causing misery and hardship. That's the Office of Fair Trading's verdict on the payday loan industry after researching the methods used by the 50 biggest lenders in this country, Wonga and the like. Now, the loan companies have been given an ultimatum to clean up their £2 billion industry or else. This McKean reports.
Liz Matthews is not your average payday loan customer. While most have jobs, she doesn't. But in other ways, she is typical. Someone in need of a short-term cash injection, drawn in by the ease with which she could get it, undeterred by the spiralling interest payments that kicked in the moment she couldn't pay it back.
Looking back now, I just think how stupid I was. And I got into a vicious cycle where I borrowed altogether 4 loans. And in the end, I just could not pay any of them back.
So how much was the original loan, and
the
how much do you owe now?
The original was for £300, and I owe now nearly £2,000. And I was very frightened. I was very worried. I thought, how am I going to pay this back? You know, it's just so worrying. You can't sleep. You just can't sleep at night.
Newsnight featured other payday loan customers last year, just before the £2 billion industry was warned it had to serve them better. These borrowers arranged almost instant loans from the comfort of their smartphones.
My first loan I took out about a month ago. I used it to pay for going out and seeing my friends, because without that I wouldn't be able to actually go and see them.
Aided by technology and abetted by the bank's reluctance to lend, the payday loan industry has more than doubled in size in the last 3 years. The government said today it was concerned customers were being lured into taking out unsuitable loans, with advertising offering such temptations as no credit checks, loan guaranteed, no questions asked, instant cash, and up to £750 instantly.
A number of payday lenders have been behaving in a completely irresponsible way. The OFT are putting 50 firms on notice over their behaviour. They are requiring them to take specific actions.
The Office of Fair Trading's main concerns are failure to check a customer's ability to repay a loan, failure to explain adequately how payments will be collected, aggressive debt collection practices, including not showing enough understanding for customers struggling to pay.
Payday lenders are required to assess the affordability of every loan that they make sure that people can repay those loans. And yet that seems to be in conflict with the fact that they earn up to half of their revenues from customers who fail to repay their loan first time round. That suggests to us this market really isn't working the way it should, and for that reason we're proposing to refer this market to the Competition Commission. It will be able to put in place much more radical changes if it thinks it necessary.
So these companies in effect are being rewarded through their customers' difficulties?
It would certainly look as though these firms are winning significant revenues, yes, from the fact that their customers are unable to pay things on time.
In 12 months, the financial regulator, the FCA, will take over responsibility for the payday loan industry. It will have powers to impose a cap on the runaway interest rates, which can, when loans are rolled over, snowball to several thousand%. When the FCA takes over, the Office of Fair Trading will cease to exist. This strike against the loans companies could be seen as a dying gasp, but the OFT prefers to call it an enforcement priority, warning that if the industry doesn't shape up within 12 short weeks, the worst offenders might lose their licence to trade. Liz is repaying her now large loan at the rate of £3 a week. She thinks today's measures don't go far enough.
When you see them advertised, it's just so easy to get. You know, you're just a few minutes online, you state how much that you want, but you don't really notice how much interest you're paying back. And I think the interest rate should definitely be capped, because it's an awful lot of money that they ask you.
The payday loan market says it's already put improvements in place, but will consider going further. Access to credit remains a necessary service, but they'll have to show that in answering that need, they're not making a bad situation for their customers even worse.
Well, we called more than a dozen payday lenders who declined to appear tonight, but Jason Gardner runs Friday Friday, which calls itself an ethical lending company, and Stella Creasy is a Labour MP who has campaigned for increased regulation. However
you dress it up as ethical, it's a pretty scummy business, isn't it?
There's a lot of nastiness going around about the business at the moment, and rightly so, in my mind. I think the industry has got a bad reputation at the moment, and that's because of the things that have been highlighted today. The way we say we're ethical is because we want to do things differently. We want regulation within the industry. We want to be seen to be different. We want to act to be different. We want to put the consumer first.
But we don't know, we don't know the names of these 50 companies that have been investigated, but we know the top ones. And what the OFT said is there's not a few rogues, it's right across the sector, not carrying out the affordability checks, aggressively clawing back debts, and earning up to half their revenue from rolled over deals.
Absolutely.
You do that.
Well, we do that slightly differently. We limit rollovers to 3 rollovers, and after that we actually to 3 rollovers. They can only roll over 3 times. After that, we can then convert any capital, the capital they owe, into a 6 to 12 month.
So you're not as bad as some of the others, but that's pretty seriously bad, isn't it?
Well, we have to give people the option, because if they can't repay the full capital after the first month, then they have to have an option to be able to do something, because otherwise, what's the alternative?
Well, what is
Jason,
the alternative?
most companies do what you're talking about, and why do you advertise on your website that you don't do credit checks, or if you do them, you don't do them the way in which banks do? That's the sort of shoddy practice today that this report has shown is widespread across it. It is exactly on your website. I've just checked your website this evening. People want to go to your website, and I hate to advertise you, but if they want to go to your website, it's on there now. It says that you don't do credit checks.
Absolutely.
It's exactly the sort of thing that the OFT has said is shoddy and has to change.
Our
But frankly, this is why we need to cap the cost of credit.
Okay, just let me say. Well, you say it's not on your website, but you do the same kind of practices as all the other
We credit check every single application. We validate the bank account, we validate their address, we validate their credit history, their payment history, how many outstanding loans they have, how many outstanding payday loans they have, how many credit cards they have, absolutely everything. We do full affordability.
If he didn't exist, wouldn't people just go to unlicensed backstreet loan sharks anyway?
I'm not trying to end payday lending in this country. I want payday lending to be like it is in other countries where the rates are capped and therefore we don't see these kind of problems. We see lower levels of personal borrowing and we see lower levels of illegal lending. It's a win-win scenario.
So you'd be okay with capped?
We've been pushing for regulation for a long time.
Capped interest rates?
Capped interest rates, as long as we can sit down and do it properly. And 4 months ago I actually asked, as long as we sit down and we look at it.
What does that mean then?
It has to be sensible caps, because the cost to fund payday loans is the cost of credit searching.
1,000% would be all right, and that not.
The representative APR is very misleading, because that's based on a loan being over a period of 12 months. These are short-term loans.
APR is annual rate, so
and your APR is 17,000%.
It's not an annual loan; it's a month loan.
So it means that we can compare you with Wonga or with QuickWit, who you compare to as well.
It's not an annual loan.
Would you accept what they do in Japan? Because in Japan they've worked with the industry to go from a 79% cap to a 20% total cost cap. So would you accept a 20% total cost cap?
We need to sit down and look at it. We're actually pushing for that, and I actually asked you 4 months ago to sit down.
No, you didn't actually. Actually, on Twitter you opposed it, and you called me naive and ignorant for trying to challenge this industry, which I think today's report shows that it's a rather wrong approach to take, wasn't it?
Understanding the industry and putting a blanket across everybody, accusing us of being just like Wonga without knowing anything about our particular business. When I put it to you, you said you're just like Wonga, I won't sit down with you. What we actually said to you is we want regulation, we want a cap, we want to limit rollovers, we want to protect the consumers.
You didn't say you wanted to cap.
Yes, I absolutely
I asked
did.
for the data. Because what I've said to all these companies is I don't want nice dinners, I want
We've asked you 4 times.
Fantastic if you're saying you want to cap. So would you accept the way in which they cap in Japan?
We would accept a cap, absolutely.
Would you accept the way in which they cap in Japan, which is a total cost cap? They've worked with the industry and they've moved it down to 20%.
We need to look at all the options. We need to look at what is best in this country for the people in this country.
And in terms of some of the other options, I mean, should they just be banned from advertising altogether? We ban tobacco advertising on TV. Would that be a good idea?
Listen, I find the puppets and all the adverts as annoying as everybody else, but the real damage in this industry is being done by the rates that these companies charge. And what the OFT report shows today is these companies are pushing people into debt because they make most of their money out of the people who have to repeat borrow and have to roll over, and then they can charge a default charge.
While we've been on air, I'm just being told that your website says right now, without any paperwork or credit checks, you can get a loan. That's right now. I've just been told.
It doesn't say without any. There is without paperwork. That's absolutely correct.
Without
credit checks?
No, absolutely not. We do have credit checks.
I'm just being told exactly that.
This is exactly why the government needs to step in, because this industry, it's like asking turkeys to organise Christmas, and there are people in communities like mine who are really struggling as a result of this. It's inexcusable, having seen the evidence today, that this government has failed to back capping the costs of credit, and that's why I'm really proud that Labour is.
I completely agree with you. I think the government does need to do something. I think the FSA needs to get involved when it is in place to do so, and we've been pushing for regulation. We want regulation. That's why one of the things we do, for example, is we introduce debt management to individuals who default on loans, because we want to help them get out of debt problems, not promote them into debt problems.
Ms. Creasy is saying that the key problem is the interest rates. That's it. They have to be capped. And they
actually,
have to
it's not just the interest rates, all the additional charges that you apply, like the default charges, like the £25 you charge people who can't pay on time, or the £12.50 you charge to roll over the loan, and the interest that's applied on that as well.
We are also the only financial institution in this country that if anybody defaults, we freeze interest.
No, you're not.
At that point.
Most lenders do this. The voluntary code says that most lenders do this, Jason.
Not at the point
including
of default.
Wonga, even.
Not at the point of default, they don't. If somebody comes to payday, their due date, and we do not recoup the funds then, we freeze the interest on
at 17,000%.
Okay.
No, we freeze it at that point, as in what was originally agreed in the contract.
In 12 weeks, if not before then. Thank you both very much.
Thank you very much.
30 years ago, Britain sent a task force to liberate the Falkland